Hey guys, what's up? My name is Patrick, and in this video, I'm going to talk to you about how I've been day trading slash swing trading during these volatile times. So essentially, I've only been trading a couple of main ETFs here. So these are going to be leveraged ETFs. The main one is TECS. So this is a 3 times bear technology ETF that is the inverse of what's going on for certain tech stocks that are on the S&P. So you can see this is plus 12 on the day. This was Friday, the 20th of March. And you can see it was plus 12 while the S&P was minus 4. So it's going to be about 3 times whatever the S&P is. And I like this one because it trades under 10 bucks. So it's smaller. As you can see, net assets are under 70 million and the volume's only 3 and 4 million. So it is smaller, but I'm able to get in and out of trades because I'm only trading up to, actually I had a position recently where I had about 3,500 bucks in this, and I was kind of I was buying it at different prices. So I might have bought it, I was buying this anywhere between like 740 and 820 over the past week, and just buying and selling, right? So I was able to get, 5 to 10% gains every time, just on average, maybe about 7.5% on average. And I made, I think about 10 or 12 trades total, again, over the past week, buying at different price points. So I should say right now, or I should have already said that this is for entertainment purposes. I'm not a trader by any means. I'm just some guy who was like, oh, can I make money during this volatility? And I like to gamble, so why not? Let's just see what's going on. And that's basically what I'm doing. So I have absolutely no idea, honestly, what I'm doing. I have a general idea of what I want to do for the long term. I was able to I sold all my stocks at, I want to say, the beginning of March, when things started to go south. It's not like I was like the Republican, the legislators that sold it super early, but I kind of saw the direction things were going in, and I made some sales. Or I sold all my stocks. I sold my funds that I was invested in, and I turned it into cash. And then I've been swing trading mostly this TECS, but then on the upswing a couple times, I also traded Nougat. And I want to open that up. So where's my, okay, so Nougat. And then for comparison, I'm going to open up SPXL, I believe. So SPXL is, first off, a bull on the S&P, right? So this is just going up when the S&P is going up, going down when the S&P is going down, and it's leveraged, right? So it's 3x. Very similar to our TECS, except this is for the entire S&P. And as you can see, on the day, it was down 13%. But just like TECS, I mean, you can time this, right? You can time this down here. But again, I'm only doing this if kind of on a swing trading basis, right? So if I think, like right now, I probably buy this because I think that this is a dip, and I know that the government is going to come out with some major stimulus packages that's going to force the markets to gain, 1,000 or 2,000 points. That's going to be temporary for sure. But just like how we saw a few days ago, there was these spikes on Monday, Tuesday. Take a look at this month. Now, obviously, this trend is bad. Like, this isn't, if this was a stock, you would not want to be investing in this stock for sure. But it's not. This is a bull ETF on the S&P. So even if you got caught holding some of this, like, who cares? Like, for sure it's coming back, because it's going to come back. Even if it takes 6 months or a year, this thing is going to come back, right? So that's why it's not even that big of a deal if you get caught holding this SPXL, because in the short run, yeah, you might lose some money. It's trending down. All right, yeah, on the short term, but on the long term, it's definitely going to come back. But I'm not doing this one. I am doing this Nougat because it's more volatile. And this is just this, but this pretty much tracks the S&P also. and this is for gold mining, essentially. And again, this one has a huge upside, and it's going to rebound quicker than the S&P does, than this bull S&P does once the market starts coming back. You just look at their 1 year and their 5 years. I mean, look at this. Just a few months ago, this thing was trading at 26, 26, 25, 30, right? And for sure, it's going to get there again, 35, 40 even. So there's a lot of these just regular equity stocks that I'll be going over that I'm going to be investing in. Just to give you an idea real quick, American Airlines and Carnival Cruises are a couple that I'm looking at to 8 to 10x my investment over the next 4 or 5 years. Okay, so this is one that will this will come back at some point. This will for sure come back, even if it takes a couple years. This is going to be coming back now. At the current time, because we're living in really volatile times, like I said, like I definitely wouldn't mind getting stuck with this at 535. In fact, I'm going to be investing some cash in this over the weekend because, like I say, like I know that they're going to do the stimulus package, and it's going to bump this up, right? So maybe I could 3x my investment. Look at that. See, because this was, or at least 2x. Invest, make $1,000, right? If the market goes up by 1,000 or 2,000 points, which it probably will, when they release their $2 trillion in spending. Okay, so that's a big, huge tip. But since this is my first video, nobody's gonna see it. Oh well. And I just wanted to kind of compare that with this SPXL, which you can see it's not, it doesn't have as high peaks. Right, so if you get this at $19, you're doing great, but you're only going to make, obviously, so it's still going to come back. Let's say to 26, 27, even 24, 25, when the market goes up short term a couple thousand points. So, but like I say, I can make a lot more and I can invest a lot more in this nougat and have what I think is going to be a pretty darn good return. Even if I get scared, even if I see it kind of going up, going down, so then maybe I pull out when it gets like this $8 thing. Because like I say, I'm almost positive we're going to see something like this once they release all these stimulus packages. But again, obviously the trend is down. So the Dow is trending down, and it will continue to trend down because this isn't like the original or the prior financial collapse. We're not going to see a super quick recovery because it's going to have dramatic economic ramifications, and people are going to lose their jobs, businesses are going to go under, and there's only so much the government can do in order to prop things up, and who knows what kind of restrictions that they're going to put on everything, and everything is very much up in the air. So for the incredible amount of uncertainty, there were some analysts that were originally saying that we would lose half the value in the stock market, which would mean that we would have a low point at about 16 or 15,000. I think it's going to drop more than that, and that was based off of the last financial crisis when we were at 12 to 13, and then this dipped at 6, so it lost 50% during the financial crisis. And I have a feeling it's going to drop more than that. Some people were saying it's going to bottom at 75% of what it was originally. So it was at, let's say, 30. So that would be like 10. Yeah, close to 10. I don't know. I think like 12 or 13 over the next, because it's going to be prolonged. We're going to have prolonged economic hardships. So again, so over that period of time, I'm probably going to be trading, and then once we get, we'll see. I hope, I don't hope that things go bad. I hope that things turn around soon, but I don't see that happening, and I see the opportunities for a bottom at that 14 or 15,000 with certain companies. But this nougat is one of them, for sure, because you can 5x your investment once things recover. So that's what I'm looking for as far as recovery comes. Just as far as the day trading stuff and swing trading stuff goes, I've given you an idea of what I'm doing, which is I'm putting limits, buy and sell limits on, particular TECS for anywhere between, when it gets to 740 up until 8, and then selling when it, comes back up into the 9s. And I've been doing a little bit of this nougat when it's dropped, and then when it's come back up, looking for opportunities. I did a couple with some of these that were a tiny bit more stable, like this XME, which is an ETF that tracks metals and mining, and it's not as swingy as you can see. So kind of the same thing, a less risk, big upside, where if you look at the 1 and 5 years, you can see this thing is trading at 27, 28. So even if I'm swing trading this, trying to buy low and sell high, if I get caught holding the bag on this because it drops a little bit, it's not a big deal. But again, you have to be careful with this one. You have to be careful with the TECS because it's a bear, and you don't necessarily know where the bottom is for the market. But I will tell you that I really, really don't think that we've seen a bottom. I think that, the market's going to fall at least another 2,000 to 3,000 points. And the other thing that I wanted to note about this TECS is it doesn't perfectly track how up or down the Dow is, because if it did, then this would be at like 14 or 15. So this is like a for sure a swing tradey, day tradey kind of an ETF, and you definitely want to be careful with this. And you shouldn't take anything to heart what I've been saying. This is just what I personally have been doing, and I definitely know that people have most people lose money day trading for sure. I don't know if I mentioned it in this video, but if you are doing this, if you are day trading, swing trading, you have to have a good amount of money in your account. So I'm actually doing this with inside of an IRA, and that's not recommended, but I'm doing it anyways, just because. But you're basically supposed to have a day trading account with a minimum of 25 grand in it if you're day trading, because you need to have money in the account in order to you need to have settled funds for when you're selling your shares. Otherwise, you're not able to sell your shares. So you don't want to get stuck holding something that you don't want because you don't have enough money in your account. Okay. And I mean, that's pretty much it. Like I say, my positions are anywhere between I was invested as much as like 3,500 in this before selling, but that was probably too much. You probably don't want to have any more than like 1,000 to 2,000 at any time in this, right? So that's kind of where I'm at. I guess I'll just talk about this long term just really, really quick. I mentioned it already, but Carnival Cruises and Six Flags also, because they have a nice dividend and there's a lot of room to growth. But like I said, I'm going to make another video on this. But Carnival Cruises and then American Airlines, because of the upside. So the upside is I want to get Carnival Cruises. I was hoping that it would get to like $6 or $7 a share. It doesn't look like that's. It might happen because, people are going to be selling these shares like crazy. But look, this went up 20% today on Friday when the market went down 900 points, right? So that should tell you something pretty big, that Carnival Cruises was undervalued, because they are because it's a very good business when they actually have business. And they have a really nice balance sheet. So they have a ton of assets. And yeah, so they have a ton of assets. They've got a ton of they're like plus 25 billion assets to liabilities. And if you look at their 5-year, this thing was very recently trading at 55, 60, 70, right? So trying to get this thing at, let's say, like $8, What did it drop? Wow, look, so $8 was probably the low, and then even in a declining market, you can see that people were buying this because they saw the value there. So I just wanted to put that out there real quick, and I'm going to do another video on that. If you did like this video and you want to see more, please like and subscribe.